Is Opendoor making the same mistakes that Zillow Offers made just before it was forced to shut down? This video originally was going to be about the partnership between Zillow and Opendoor and how things were going to look good for this partnership. But then I dove into the data. I wanted to see what Opendoor was up to in Southern California. Zillow Offers went under in November of last year for paying too much for homes. Opendoor appears to be heading down a similar path, and we're going to show you some specific examples in Southern California. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions in this crazy market. The partnership between Zillow and Opendoor seems like a match made in heaven. Zillow is great at bringing in buyer leads and sellers looking to find out the value of their home through Zestimates. And Opendoor has continued to expand into the iBuying model to buy directly from sellers and bring convenience to the process for those sellers who want certainty in knowing when they're going to close and the exact number. So together they seem like they'd be a powerhouse. Some real estate agents feel threatened by this partnership, but I'm intrigued and feel like it could be beneficial in the long run to sellers, buyers, and agents in the marketplace over time. Opendoor is a publicly traded company under the stock symbol of Open, and I could dive into all the data that they must make public, but I figured let's look into the local Southern California numbers with the access I have as a real estate agent. So we're going to show you the number of properties that Opendoor currently owns. We're going to show you the number of properties they've sold in the past few quarters, how long it takes to sell those properties, and we're also going to reveal specific examples to show you just how they're doing on the acquisition price, what they pay for the property from the seller, and the ultimate sale price, just how well they're doing on that delta. As you know on our channel, if you've been following us, we love to dive into the data and we share the numbers for Southern California. So using CoreLogic, I was able to pull up the total number of properties that Opendoor owns in the 6 Southern California counties we cover. And here is the breakdown we have, and this is as of shooting today. They have about 191 properties in Orange County, 350 in LA, Riverside is 300, San Bernardino 156, Ventura 75, San Diego 188 properties. That adds up to about 1,260 that Opendoor currently owns. Interesting fact, because we did other content on this, this isn't too far off what Zillow owned. They owned around just over 1,000-ish at their peak. So once Zillow Offers shut down, Opendoor filled in that gap and is going gangbusters. And what happens to the properties that Opendoor acquires? Well, after the sellers move out, they'll put a little bit of lipstick on the pig at Opendoor, maybe put in some new flooring, some paint, nothing major, and then they'll get that property back on the market. Where do they make their money? Well, there's a fee that is charged to the seller for the convenience of the sale process being so easy and not having to wait, not having to put it on the open market. That's what Opendoor is going to do. And then there's theoretically going to be a delta between the price that Opendoor pays and what it sells for on the open market. So that's how they're going to make profit on the sale. Now here we have broken down into quarters how many properties actually were sold, brought to the MLS, and closed. And you can see Q3 2021, they were ramping things up. Q4 2021, getting more closings done. In that quarter is when Zillow Offers shut down. Q1 going gangbusters, and they've sold their record number. Then things started to shift, and you can see Q2, the things dropped to 184. Now Q3 through today, which we're at about the third week in August, so there's still a little bit more time in Q3, we're at 77. So even if they double that number through the end of the quarter here, they're still going to be lower than Q1 and Q2 of 2022. Now we're really getting into the data, and I have a whole bunch more to share with you, but you can see here the median days on market. And why this is relevant is how long is it taking them to sell their homes? And have we seen a shift in how long it's taken based on what's going on in the market today? And you can see Q3 into Q4, they were getting better at selling their homes. Then Q1 and Q2, they were flying off the shelves. Now 32 and 34 is quick, but still not as quick as what we were seeing in the open marketplace. So these properties were taking a little bit longer to sell. Then now in Q3 through today, we see a doubling in the days on market. And again, days on market means the time from listing the property to closing on the property in this data set here. Now, we switch scales on you, but it's important to look at it. The last number, 54 days on market, is for all of their currently active inventory as of today. There are 271 homes. So it's looking like that 62 days on market median is going to go up unless they're able to get a whole lot of properties under contract in the next week or so. So you can see that things for Opendoor are taking longer to sell. One more quick chart before we dive into some specific examples. And like I said, the profitability for Opendoor relies on the fact that there should be theoretically some delta between the price they pay and the price they sell the property for. Now, this is not necessarily the price they pay for the house. This is the price that they list the house at. So you can see that in Q3, the median list price was $539. The median sold price was $525. Q4, they got better at this, and they basically listed at $574 and ultimately sold for $575. But then you can see Q1 through today, the list price is higher than the ultimate sale price. What that means is that ultimately they're taking price cuts on the property. But what we haven't addressed in this is whether they're actually losing money. If these list prices are 10 or 15% more than they paid, they could still take these reductions and still be doing okay. That's why we have to look at some specific examples that I'm about to share with you. Now, don't run off. I know a lot of people get scared when they see Excel spreadsheets or they feel like they're going to pass out and go to sleep, but I promise there's some good data in here. So remember I mentioned the 1,260 properties that Opendoor currently owns? Well, I found them and I downloaded them here and I divvied them up by county, and I've got addresses, I've got the date they sold, the prices. And if you want this data, all you have to do is sign up for my weekly email newsletter, and I include a link to this, and I'll update it every week so you can take a look. And if you're interested in one of these properties, reach out to us. We'll help you get it. But here's what matters in this. What I did is I literally randomly went through these and picked some of the properties out to see how Opendoor is doing. Now, it is completely random. I tried to mix it up slightly by county. What I did do specifically is I looked for properties that had closed in April originally. So here's an example of a property that closed on April Fool's Day in San Diego for $674. I went to April assuming that, hey, this would be a good time to look. That's when Opendoor acquired it. They've had plenty of time to get it back on the market. Now, Opendoor has bought and sold more properties. They're gone. They're not on this chart because they've already transferred into someone else's name and they're not owned by Opendoor anymore. And I can't pull them up easily. So bear that in mind. So these are ones that they, as of pulling this list, Opendoor still owns or just sold and the data hasn't switched over. So I decided, okay, let me run some of these in April, and then I ran some in June after what I found in April. And what I figured was April, when they acquired, the market had shifted a little bit, but they had written that offer before interest rates got crazy. So maybe they got better at this. I'll explain what I mean now when I show you the specific examples. Here's a quick dive into 5 random properties, literally random, just went through and pulled them, had no intention of being able to find any sort of pattern, just wanted to see how they were doing. So what we have is we have 3 that are active, we have 1 that is pending, which means it's under contract, we have 1 that's already closed. And you're going to say, hey, wait a minute, Christian, I thought you said Opendoor doesn't own these anymore. Well, that's an example of 1 that has closed and the county data hasn't updated yet, but it will in the next week or so. So let's go ahead and dive into that one and see. Pulling back the curtain on some of the data that we have, these are realist reports. We can run these for any property in California. So if you need one of these, let me know. There's a few other spots you can get this. But you can see that in April that Opendoor paid $658,500 for this property. They brought it from Wanda Wright. and listed the property later on, and finally this one closed. Like I said, it's going to be updated, so this will no longer show as being owned by Opendoor in about a week or two. But right now we caught this snapshot, purely a coincidence, 658.5, and the property closed for 615. So there's at least a 40 grand drop in value, 40 grand delta that's negative on this particular property. That doesn't include the cost of sale, any real estate commissions that were involved, any escrow fees, any title fees. That doesn't include any of the lipstick on the pig. That doesn't include any painting or flooring they may have done for the property. It doesn't include any carrying costs for the company. It doesn't include any of those things. Now, of course, there's the fee that helps offset their cost that's charged to the seller. But in this case, they really missed the mark. And these are some of the numbers that I saw when I ran the numbers for Zillow in some of their properties around the time that the things were starting to fall apart there at Zillow. So this is interesting. This isn't cherry picked, purely coincidental. There are a few others that we'll show you in April right now that aren't as severe, but this one was a miss for Opendoor. Here's one in Los Angeles. This is currently active. It's been on the market for 118 days. That's a long time. It has a price drop. It is listed for $1,021,000 right now. And here we can see that Opendoor paid $1,028,000 for it. So that current list price of $1,021,000 is below their acquisition cost, only by about $7,000, but it's not under contract yet. We don't know ultimately where it's going to trade at this point in time. And again, doesn't cover the cost of the sale, doesn't cover any carrying costs, any work they did to the property. Just another random one that Opendoor is going to lose money on. Of the 5 properties I randomly picked, they're going to lose or losing money on every single one of these. That is an interesting trend to see. So to be fair to Opendoor, I was thinking, you know what, April market shifted when they closed on it, and let's see if they have since adjusted. Maybe properties that have closed in, for example, June, maybe they've made some adjustments and they're doing a better job at getting in line where market values are. Now, I could try July, but the problem with that is they're too recent and I won't find as many that are actively listed again. We could do that in a future video. I'm not trying to pick on Opendoor. I'm just trying to figure out if they're doing a good job with their business model in Southern California. So here are some that closed in June and subsequently have been listed. Again, not cherry picked. These were just randomly picked. Of these 4, they're losing money and they're still not yet under contract. So we don't ultimately know how much money they will lose until it gets under contract and sold. Let's dive in and take a look at one of these randomly. And here's a cute one in La Crescenta. Looks like a nice little house. Maybe they put some paint on here. We don't know exactly what they did. Currently listed at $1,053,000, been on the market for 49 days. Let's see what they acquired it for. Ouch. Another one that they're going to lose money on. Acquired at $1,126,000. Currently listed at $1,053,000. That is a $70,000 loss and still not under contract. It doesn't cover the cost of sale. We're seeing this in a lot of their listings, and this is the same thing that Zillow was doing, and the reason that Zillow shuttered their business, because they were overpaying for homes. Let us know in the comments below how you feel about the partnership between Zillow and Opendoor. Also, I want to hear what you have to say about the iBuying model. If you think it is going to stick around, we personally believe it is. If you want the charts from this video and weekly updates on the inventory that Opendoor owns, make sure you subscribe to our free weekly email newsletter. We have a link below so you can do that. And you're not going to want to miss this market update where we tell you more about Southern California. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.